Howdy, Jacob here. Today we're looking at Telus Corporation. Let's look at some of the financials here. We have a $26.7 billion market cap on $43.1 billion enterprise value. 6.2% dividend yield, pretty substantial there, well above our 4% we're looking for. It looks like they provide a range of telecommunication and IT products and services up in Canada. Their revenue has gone from about 10.7 10 years ago to 13.5 billion in 2022. Return on invested capital is middle of the pack, single digits. They have pretty consistently paid a dividend. 64 cents in 2013 up to $1, only decreasing in 2015. Other than that, slight increases every single year. So let's see that balance sheet. We see that they have about 2 billion in short-term debt, 16.6 billion in long-term debt, and only 700 million in cash on hand. So a good amount of debt and not a lot of liquidity here. Their 5-year free cash flow average is probably about a billion, I would say, and their aggregate dividend payout of 950 million. So they're paying out a substantial amount of their dividend or their free cash flow in dividend, and it looks like their other use of cash is really acquisitions, and to fund those acquisitions, they use debt or whatever you want to say to fund the acquisitions and their dividend. Beyond their excess free cash flow, they use debt, and then it looks like in 2020 and 2021 they actually issued quite a bit of shares for that as well. And so I think we're ready to start making some assumptions. I would say that I wouldn't be surprised if they grew roughly 30% a year, 13 on the PE, price to free cash flow. I don't see a reason to put any sort of premium on there or detriment. I feel like after 7 years they're still probably going to be growing in line with inflation. As for margins, it looks like the operating margin has gone down a bit from 19.4% to 15.5%, but their gross margin has actually gone up from 56.2% to 61.1%. Interesting to see that. So if we look at their long-term debt, let's see what a 2% increase on their interest-bearing debt would do to them. Let's say there's about 18 billion, 180 million, 360 million. 360 million on a billion of 5-year average free cash flow is about 36%. So that's a pretty hefty decline of earnings if there were to be an increase in their debt. So let's see, what is the average looking like? 10 and 7. Maybe I'll do 7, 6. Share change. They've issued a bit of shares. Is that due? Quite a bit of stock-based compensation. We're looking at almost 100 million in stock-based compensation. So quite a bit issuance of shares, just 3% for the assumption. And then because they're paying out what appears to be 95% of their 5-year average free cash flow, I'm going to say that they definitely cut that in half, and then they'll be able to afford it. We're still looking at 3% dividend yield, so nothing too alarming there. But the company has a lot of debt, and so you'd want to see this company start to allocate some of their cash towards debt payments rather than debt issuance. And so right now we're seeing a lot of dividend payout and then a little bit on the acquisition side, but we really want to see them start paying down some of that debt. And as always, if their stock gets stupidly cheap, we want them to be buying back shares. Finally, we get to a price with all those assumptions that the stock price would need to fall 67% to get a 15% return given these assumptions. I think the company yielding 3% after cutting it in half is fine, but this is again going to be one of those companies you're going to want to see what they do and how they allocate their cash in the future to see whether it's worth it or not. Because right now the dividend payout is very substantial, and they do like to make acquisitions, and to fund that they either issue shares or issue debt, which we don't want to see. We want to see a company very strategically using debt issuance to have a solid leverage ratio that's most advantageous to them, not just go into debt to fund projects that they might not be able to pay off in the future. So I hope everyone enjoyed the video and has a great rest of the day. Thank you.